Hi, folks. Nick Shaheen here, recapping the week ending July 10th. On the face of it, the scoreboard looks pretty tame. Green candles across the S&P, the Qs, which are the NASDAQ, and the small caps, the IWM. Under the surface, a whole bunch of turmoil, as you may already know. Greek and China news hogged and caused a whole bunch of violence throughout the week. It all started on Sunday night, which is the 7-5. The vote came out no in Greece. Markets fell, recovered, fell, recovered, fell. We had several tests of that low, and at the end of the week, market pulls off a good one, so the scoreboard ended up green. It could have been much, much uglier. A point of note was Apple, strangely, on Thursday had a massive candle that brought it down to 119.22. My speculation is that it is not based on fundamentals, but rather somebody needing money in order to cover losses elsewhere, given the big fluctuations at global level. Went to the piggy bank, which is Apple, sold the asset they had to raise cash in order to cover shorts somewhere else, or losses, I should say, somewhere else. All right, so overall scoreboard, green for the markets. However, we did set lower lows and lower highs, which is nothing good. What's good is that the recent lows have held, proven themselves worthy, previous bounces, but the bad news is that we're on them right now. So the floorboard, how many times you're going to hit on the floorboard before it breaks. So the potential is, if you're bearish, hey, that board's going to break, we're going to fall. And if we fall hard. We're probably going to break the 200 on the SPY if we do fall, if the board breaks. However, having closed nicely, and given that the expectations from the market are for a deal over the weekend from Greece, and also just as important, the China, given that China extreme measures that were taken by the government in order to stabilize their markets that were so wild, the week ending 7-10, look like they're holding. So assuming that they hold into Monday's open for next week, and assuming that the Greek vote goes well in the parliament and is accepted by Merkel and company, then we open to more green, and we will bounce once again, and the floorboard will hold and will continue to meander the range-bound trading that we've had. All right, so what could go wrong? What could go wrong is the fact that the vote went no. The vote came from, let's back up. What happened is that the Greek Prime Minister said, okay, I give up. Here's the proposal, and it's exactly what you guys had asked for on the 26th. These are the same terms that they, the Greek government, put to vote. And they said, hey, I not only want you to vote, I want you to say no, reject it. And here he is trying to resell it to them and saying, you remember that thing where you all went through heck the whole week? The banks were closed. We're like poor. We can't do anything. We're dead in the water because I wanted you to vote on that and reject it. Just kidding, suckers. I want you to actually vote yes for it this time. This time I'm not kidding. So it might come across wrong to those 60% that actually voted no. It's not 60% of the people, but 60% of the voters. So regardless, there could be some turmoil there. There's also some turmoil possibly coming from Merkel. What if Merkel doesn't want the deal? Because what they offered on the 26th was based on the condition of Greece from the 26th. Now it's a lot worse. So they're starting from a deeper hole. So maybe the terms don't apply anymore. Maybe they need to tighten the screws a little more. In any case, it should, in that event, at least provide a framework to start, okay, they caved, so we should just continue talking and to come up to a better situation. So possible can kick for another couple of weeks in order for them to ink the deal, but it looks like the deal will happen. In that case, then the recent lows, we'll call this a mini correction, and we move on. All right, so this is what could happen. What could we do? Well, I still stick to the fact that slower traders should not worry about trading the immediate term, meaning I'm not going to worry about trying to trade this ticker for the week, like the S&P, trying to do iron condors and all of that. I should stick to the long range trades, and members know exactly what those are. I want to stay away from trouble. I want to leave room for error. Those are the slower traders. Active traders can take solace in the fact that, hey, I have choppy trading, so I have an opportunity to make money from the chop. And it's clear chop, bottom, top, bottom, top. If I'm fast enough, I could set nice iron condors to profit from that. Level picking is key. If you don't know what you're doing, ask. And also, what I don't do is probably more important than what I do, because I want to make sure I avoid the pitfalls that a lot of people do. I don't chase up or down. I don't panic. And I'm always cautious. I leave room for error, basically. So if I do that, I should keep myself out of trouble and live to fight another day. I also need to find the ranges, and we publish the ranges weekly, and pay attention to each individual ticker that we trade. Some ideas, like on this huge drop from Apple, yes, it may be challenged on the watch, but the watch wasn't in anybody's model. And most people said, oh, I don't even have the watch in my model. I'm going to upgrade Apple just based on what Apple is. So why are they concerned about the watch now? If it's not in your model, you shouldn't take it out. It wasn't in. That's number one. The China issue, yes, it could be valid. I just find it hard to believe that suddenly China is going to be dead in the water for Apple. If it is, then that's it's a cause for concern. But I can't believe that it happened on that afternoon, that everybody figured it out. This is not related to China. So anyway, my belief in Apple is that in the long term, it's still a sure thing. It's a big beast. It's a boulder that's rolling. It's going to take a lot to stop it. It's going to take a lot of mess-ups from Tim Cook, and I mean talking major mess-ups in order for them to slow down the behemoth that it is. So until then, I don't mind going long it long term. Like if I want to take a call spread for August or September and play the earnings that way with small money, tiny little money, lotto style, why not? Almost the same comment for Google. So let's look at Apple actually. Okay, let's go out to 1 year so we can see it out there. You can see the general trend. So if I want to go out in time, I can pick whatever level, spend a couple of bucks. Same deal with Google. Now I'm favoring playing the Goog L, not the Goog for some reason. I just get better luck doing Goog L. This is 1 year. Google has been stuck sideways, iron condors all over the place. However, it's going to report soon, and I do not want to be caught holding a big position in Google through the report. Therefore, I'm strictly playing it through a lottery ticket. Flip a coin, pick a direction, do a call spread, do a put spread, depends on your coin. Why do I say flip a coin? I'm not being funny. Reactions, immediate reactions to earnings reports are complete coin flips. It's a 50-50 shot. Even if somebody tells me, here's what the P&L is going to look like ahead of time, I couldn't tell you how the markets are going to receive those earnings. Believe me. After the fact, I can place the best. Once I know what's going on, I can place the best trades. It's easier to do it after the fact. But in the meantime, I don't mind spending a couple of dollars, risking a little bit on a spread, and hey, it's a 50-50 shot. I'm either right or wrong. Anyway, if you have any questions about anything in here, please do not hesitate to ask. Until then, Nick Shaheen signing out.